John, why do you say 6.5 or 6.75, but I can read 5% somewhere online? What's going on with that?
Well, it's all about upfront information and making sure you're reading the fine print and asking clarifying questions. Because what a lot of lenders are going to do, they want to catch your attention by a flashy rate, flashy low rate, which doesn't always mean that you're getting that rate for free. So, whereas someone might be giving you a 6.5% rate in the standard market rate today, and someone else is offering you a 5% rate, you're likely paying for that rate. So what they would do is charge you discount points, which lowers your rate, but you're going to come to the closing table and you're going to see that on your closing disclosure as an origination charge, basically. It's the cost of the rate. So you're not getting that rate for free. You're actually paying for that low rate.
That makes sense. So is that a gimmick, or is that kind of just misleading, or how would you describe what's going on?
I think it's probably a case by case basis. I mean, gimmick, yes, unless they are disclosing that information up front. But if they're just trying to get you to sign some paperwork, lock you into the deal so that you're not shopping another lender, that would be considered a little bit misleading. When something looks too good to be true, you've got to know when to ask those questions and where to look. And the great thing is, you, the agent, and me, a lender, we both know, we know what that looks like on a closing disclosure, on a loan estimate, on an upfront quote or estimate. We want to look at those itemized lines and make sure our buyer or our borrower is not being charged something that they're not aware of.
Right. And you've mentioned this before, but anybody can, as a buyer, they can ask for an itemized estimate of what the closing costs are going to be, correct?
Yeah, and in fact, you should always do that. I mean, that also gives you, if you are shopping, it gives another lender leverage to do better or to compete. They're going to want to see that as well, but you want to see what all you're getting yourself into up front and not at the end of the line. So it's important to ask for that for sure.
Right. Great. One of the other things that I see a lot of times out there besides interest rates is something that says I can refinance for free, because, one of the things we kind of talk about is that there's a possibility that rates could go back down and then buyers can refinance at a little bit lower rate. But is that really free to refinance, or how's that work?
Well, is anything ever really free in this industry? Probably not. No, there are two ways lenders go about this. Free is the biggest misleading word and misconception there is in this industry. There's always a cost to borrowing money. So what would happen in this instance is one of two things. So you're either going to be offered a free refinance, and what they're doing, and a lot of people do this is very standard, is you're going to roll the closing cost into the loan amount. So instead of paying that closing cost at the closing table up front, you're then just kind of spreading that out, including it in the loan amount, spreading it out over a term of 30 years or 15 years or whatever the amortization period is. So the second way, that's probably a little bit more gimmicky, as we like to say, is increasing the rate without telling you maybe. And then they're going to give you a lender credit because that you're paying for it in the rate now. And there's overage in their pricing, and they're going to take that overage, give you a lender credit, but you're still paying for it in the rate.
Okay.
So that lender credit will cover your closing cost, but really you're paying for it in the rate.
Okay. That makes sense. And really, there's not too much give in the rate. Is there really? You guys are a local lender. I think it feels like sometimes you have some different options that maybe some other lenders don't have, but sometimes the rate is still the rate for the most part. There's just ways to change it around or manipulate it a little bit.
Yeah, absolutely. And you know what? It's a very competitive, and in order to be successful in this industry, you have to be competitive. We do have a very competitive pricing module, and there are some differences, absolutely, especially working with a local bank.
Right. And really, it's okay to have some type of creative ideas on how to make it work, I think, for every single buyer, because every buyer is a little bit different. Some people maybe have enough cash to bring to close, but they want their rate lower. Some people are okay with a little bit higher rate because they have less money that they can bring to the table, or maybe debt to income is off a little bit. So I don't think that it's all misleading or totally gimmicks. It's just a way to make it work for the buyer and their specific situation.
Absolutely. It's just the important thing is to be upfront about it. I mean, we don't want to, we don't want to have any surprises at the end. So
Yeah.
absolutely.
I agree.
Yeah.
One other thing, which I did not know this until I talked to John beforehand, but you have kind of a nice trick that helps people know what to be able to compare kind of apples to apples when you're looking at different lenders. And what is that trick? Tell us about that.
Yeah. The trick is the APR. So the APR is the annual percentage rate, not to be confused with your interest rate, which a lot of people do confuse that. But for this purpose, an annual percentage rate or an APR is a broader sense of the measure of the cost of borrowing money than what the interest rate is. So this reflects any points you're being charged, any fees, any charges you're incurring at closing to get the loan. So a good example of this is your shopping rates. You get a loan estimate from lender A and a loan estimate from lender B, both the same interest rate at 6.5%. But lender A's APR rate is much lower than lender B's. So something is awry in this situation. So what this tells you is the higher the APR, the more fees you're being charged. So it wouldn't make any sense to go with lender B at that point, because you're getting the same interest rate with lender A, with less cost, basically. So when you're quickly shopping, make sure you're always paying attention to the APR.
I think that's a great trick and one that I haven't used before. So that is definitely on there. And as a buyer, getting all this information is totally legit and should be easy when you're talking to a lender. A buyer should be able to come and get that information and ask for it. And the lender should be able to get that off to them fairly quickly. Correct?
Absolutely. Yep.
Yeah. All right. Well, any last things you want to add? I really appreciate you being here and sharing your knowledge.
Yeah, no, I think we've covered it. I always appreciate you reaching out and us doing these videos. I think it's great information, especially right now when things are a little bit more tough and volatile, and these things matter. So
they do. We want buyers to have every kind of advantage to have their loan or their, contract looked at over maybe another contract. So, well,
absolutely.
Thank you so much for being here. And thank you all for joining us on the channel. And if you want to check out another video that John and I did for first-time home buyers, you can check that out. I also have a great relocation guide. If you're looking to move to the area, you'll want to download that. And remember, you deserve to love where you live.